A very good afternoon, ladies and gentlemen. Welcome to the 18th of August weekly market review. We just finished the National Day rally, and today I have with me Mr. Gerald. How are you, Gerald?
Hi, Sunny. Hi, everyone who has joined us today. Yes, so I think apart from the National Day rally, we also saw the end of the earnings season in Singapore. A very busy week over the past few weeks with a lot of company announcing their results and leading to fairly sharp movements in the Singapore market as well.
Yes, before the show start, I was chatting with Gerald. Is there any ang pao in the National Day rally? It seems that this time round, not so much of an ang pao, but encouraging us to study more under the skill futures and, of course, try to pivot to learn more AI stuff. And Gerald touched on the Singapore side. I will touch a bit on the US side because we are seeing that more than 90% of the S&P 500 has reported their earnings, and 80% of them has been above market or analyst expectations. And on Singapore side, we also saw the news that Keppel sold M1 to Simba. So that brings our telco back to a three-horse race. I think Gerald will touch on some of the telco companies today, Gerald.
That's right. Okay, before we start, the usual disclaimers that today's sharing is for informational purposes only and does not constitute financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you can access various online resources as well as investor education programs. So over the past week, we saw the continued rally in the US market. The S&P 500 closing the week at 6,450 points, and the Nasdaq also having fairly strong gains, and now at 21,623 points. In Singapore, Sunny mentioned earlier that we reached a new high before closing down 0.2% for the week at 4,231 points. And I will share what is driving some of this weakness. Okay, in terms of the data that came out last week, I would say pretty mixed. First, we've got the consumer price index data. This shows the month-on-month change, and the July inflation was at 0.2% compared to the previous month. And I think that would reflect that the inflation still generally remains moderate in the US. And following the release of the CPI data, we saw the market rallying with increased expectations of the US Fed rate cuts. However, what we saw later in the week was the producer price index data. This actually came through much stronger than expectations. And I think that reinforced investor concerns that the tariffs might actually lead to higher inflation. So overall, a mixed set of data on the inflation front. And if we to now look at the current expectations of Fed rate cut, we are down back to about 92% expectation of a rate cut in the upcoming September meeting. So overall, despite the mixed data, investors still largely expect that we'll see an interest rate cut coming through in September. So we see here the US one-year government bond yield having that sharp fall at the end of July and remaining at fairly low levels compared to where it was 1 month ago, still at below 4% at about 3.93%. If it's a look at the Singapore 6-month T-bill yield, that has been falling consistently and now at 1.59%. So effectively, I think the trend is that the bond yields are coming down as a result of this increasing expectations of a Fed rate cut. So in terms of the top performers in the past week, we see some of the developer names in here. City Developments up by 6.3%, UOL up by 3.3%, reflecting the improved sentiment towards the property segment as a result of the fall in interest rates. In terms of the worst performers, we have got Sembcorp Industries that continued its decline after the earnings were reported in the previous week. And I've gone through the Sembcorp Industries earnings in the previous weekly market review. If you'd like to get an update, you can refer to the previous episode. Okay, the name that I wanted to share more about today is Keppel, with the announcement of its stake in M1. We see here Keppel share price has done very well since the dip in April with the Liberation Day tariffs. It has rebounded fairly significantly since then, closing now at about $8.58 as a result of some of the divestments efforts that the company is making. So in terms of the transaction to sell M1, the total value of the sale would effectively value M1 at about 1.43 billion, based on an enterprise value to EBITDA of 7.3 times. And with that, Keppel will receive close to 1 billion in cash proceeds, based on its 84% effective stake in M1. Okay, there are certain conditions that need to be met for this transaction to be completed, including the obtaining of relevant approvals from IMDA, as well as the restructuring of the M1 group to carve out certain excluded assets. So what is worth noting here is that Keppel will not be selling the entire M1 as it is today. That will exclude some of the ICT business that Keppel wants to be keeping for itself. So I think that explains the restructuring of the M1 group to be able to cover out these excluded assets. Okay, so this will show the breakdown around which are the parts of M1 that will be sold, mainly the telco business. But in terms of the excluded assets, that will be the ICT businesses. That Keppel still believes that there is some room to grow, as well as having synergies with its other businesses. So in terms of the impact to the Keppel financials, in terms of the expected impact to the earnings per share, comparing to the first half of 2025, that is expected to provide a slight boost to the earnings per share to 21.3 cents compared to the reported, which was 20.8 cents. Okay, more importantly, it would help in terms of lowering the net debt to EBITDA to about 1.7 times from 2.4 times previously. So what is driving this improvement in the balance sheet? That is largely driven by the 1 billion of expected cash proceeds coming through from the sale of M1. So I think that to me is one of the key benefits in terms of how it is helping to bring down the gearing levels of Keppel Limited. So I think that generally reflects what Keppel has been doing since it announced its Vision 2030 plan. Part of it, which entails asset monetization, we see that it has effectively monetized 7.8 billion of assets since 2020. And year to date, 2025, there would also be about 950 million of assets that have been monetized, including property assets as well as some other assets within the Keppel portfolio. So overall, the company has a plan to monetize assets amounting to 10 to 12 billion by the end of 2026. And what we see here is that with the various assets that have been announced, that would effectively bring the company on track to meeting this target. So all of it is meant to drive increased capital efficiency in terms of how capital is being used on Keppel's balance sheet. And what we also see is an increase in dividends payout as part of this improvement in capital management. Okay, so in terms of the dividends, we see that Keppel has been paying out an interim dividend of 15 cents per share, and that includes the first half 25 earnings. And in terms of FY24, the company announced a total dividend of 34 cents, which would bring the dividend yield to close to 4%. The company has also announced a share buyback program of 500 million. And so that effectively is how it is making better use of the capital on its balance sheet. Okay, so currently, based on the dividend yield, that is at about 4%, which is below Keppel's historical dividend yield. Okay, the next name I wanted to share more about is Singtel, which is also a name that is seen as a potential beneficiary of this consolidation in the telco sector, given that it is the number one player in Singapore's telco market. We see here the share price has a bit of a bounce after the announcement of the sale of M1 to Simba. And also, the company reported its most recent quarterly earnings. So what we see here overall is that the underlying net profit continues to grow strongly at 14%. And excluding currency impact, it will have grown by 17% compared to the previous year. Okay, so the company continues to execute in its Singtel 28 plans, whether is it in terms of growing the revenue from Singtel in Singapore, Optus, or some of its key growth businesses like NCS and Digital Infraco. So we see here in terms of its core business, Australia continues to do very well, particularly for Optus. The operating profit grew by 36% compared to the previous year. In Singapore, despite the competition, the Singtel Singapore operations still managed to see operating profit growth of about 2%. Okay, in terms of its growth businesses, NCS grew by 22% in terms of its operating profit due to the higher margins that it has been able to make in this business. And likewise, in terms of the Digital Infraco, we also saw growth in its operating profit driven by its regional data center business. The regional associates for Singtel continue to see improvement as well, driven by Airtel as well as AIS. So Airtel is in India and AIS is in Thailand, and that is helping to boost the contribution coming through from its associates. Okay, so overall, Singtel remains on track to meeting its 2026 targets. We see here it's expecting the operating company EBIT growth rate to be a high single digit. It managed to get a growth of about 10% in the first quarter of the year. It expects the cost savings to be 0.2 billion for the full year, and the company believes it is on track to achieving that. And in terms of the regional associates dividends, it expects 1 billion for the full year, in which the first quarter is already achieved 0.6 billion. Okay, so we talked about the consolidation in the telco space, went through Keppel's sale of M1 as well as Singtel's earnings. In terms of the upcoming week, we see a number of companies going ex-dividend. At the same time, we also have got SETS that will be reporting its earnings. Okay, so with that, I will hand over to Sunny, who will share the technical analysis.
Okay, thanks, Gerald, for that coverage on the Singapore telco market and the latest developments. So now I will touch on the broader index movement. I'll start with our local market, the STI index. You can see that last week on Thursday, we actually touched a new all-time high at 4282, okay, 4,282. That is the new all-time high that we have on the STI index. And then after that, on Thursday and Friday, this morning as well, we see the STI pullback due to some profit taking after hitting the all-time high. So last week, our projection is that the STI will move around this range between the 4,150 points to the 4,270 points level, which was the previous high that we saw on 25th July. So fast forward to this week, I believe we are still likely mostly going to be within this range of movement. I will not be surprised if the STI continue to nudge higher, maybe 4290, okay, trying to test, but I don't think we will see some kind of a massive breakout like the 10% breakout that we saw during the month of July. So 4,290, 4,300 would be, I think, in the next few weeks, the max that STI will stretch through. But then the support level can be updated for a few reasons. One thing is you can see that the narrowing of the Bollinger Band, we are now the low bound of the Bollinger Band is at 4,167. So having breached the 20 days moving average, the line in green, the next support level definitely will be the lower bound of the Bollinger Band at 4,167. This may also coincide somewhere on the low that you see on 4th of August. So that is around the, let me check, 4,144 points level. So we should see around the 4,150 points level, some strong support coming in to sustain the rally that we see so far. If we miss that, then definitely we will touch the 50 days moving average at 4,092 points, 4,100. I will round that off. That will be the next support level for the STI. Okay, so these are the two key support levels that we should be looking at. But then I think we should be trending around the 4,150 to the 4,300 level in the next 2 weeks or so to the end of the August. Indicator wise, we can see that MACD is showing negative sign for the past 1 week or so already. So that means that the rally that we see so far in the past few months is sort of peaking, and then we are going into some kind of consolidation mode right now. So I do believe that we are going to breach the 4,200 points level towards 4,150 to see any first sign of support coming in. The RSI has also been sliding lower. You can see that it has come down from a high of some reading of 91 on 24th of July to the reading that we see now at 54, close to the 50-point neutral mark. So that also shows that momentum has been weakening on the STI as well. So until we go below the 50-point neutral mark, I don't think there would be any kind of a rebound. The reason for the 50-point neutral mark is that when we saw here over time in the June period, the middle of June, once the RSI hit below the 50-point mark around here, 45 points, the rebound starts to come in again. So that I hope that sign of a 50-point RSI reading coincides with the 4,150 support level of the STI, giving the index some kind of a technical support to push us back to the 4,300 level in the next 2 weeks. Next, let's move to the Dow Jones Index, which had a new all-time high last Friday. We are now looking at the high of 45,203 points. We closed slightly lower, but still positive for the Dow Jones Index, the top 30 stocks in the US, at just below the 45,000 mark, 44,946 points. So where is the Dow Jones likely going to head? We can see that the Dow Jones turned positive in the last 2 trading days of the previous week. So that could be a sign that, hey, we are going into a sustained rebound, okay? So if let's say we go to a sustained rebound, usually it would track the upper bound of the Bollinger Band. And you can see that is also what happened on the 25th of July week period, okay? So the indicators MACD is positive now. The RSI at 60 points is also pretty healthy. So I think we should use the 20 days moving average, the green line, as the support level at 44,445 points or 44,500 points. And then the next level will find some confluence with the lower bound of the Bollinger Band with the 50 days moving average at around the 43,600 or 43,800 points level. That will give the Dow further support. So the range will likely be moving over here between the 43,700 towards the 45,000 again, okay? Next, let's move to the S&P 500, which had a negative Friday, but nonetheless, all three US major index had a second consecutive positive week. So I mentioned earlier that in the US, more than 90% of the S&P 500 index company has reported, and more than 80% of them has been performing above market or analyst expectation. So that means that we are on a very strong footing in terms of corporate earnings. And on the macroeconomic front, it was a mixed bag of data on overall in the last week, as what Gerald said earlier. So this week, earnings would include some of the bigger retailers like Walmart and Home Depot. So that could also give us a sign of how strong consumer spending is to push the US economy higher. So support level for the S&P 500 20 days moving average at 6,366 points. And then low bound of the Bollinger Band with the 50 days moving average around the 6,250, 6,220 points level. That would be the next support for the S&P 500. On a technical perspective, the low on early part of August, which is the bad non-farm payroll data at the level of 6,200 level, will be a very good support level as well. So you can see three factors coming in to support the S&P 500 at the 6,220 points level. These three factors over here will give the S&P 500 a very strong support level to work with. On the indicator side, the MACD turned positive, so that means that not to worry so much. Likely the uptrend will continue according to the MACD indicator. The RSI at the 65-point reading is also trending close to the 70-point mark, so that means show that we have very strong momentum, but we are also very close to the overbought level. Okay, so that's why we need to keep a close watch on the S&P 500. Okay, on the top side. Lastly, let's move to the tech-heavy Nasdaq index, Nasdaq Composite Index. We are down 0.4% last Friday. So we have also seen that the high of last week touching 21,803 points. So looking at the indicator wise, I think you also have a positive reading. So that is a good sign. So what MACD is suggesting for the major three index is either we still have some positive upside, or likely we're going into a sideways kind of a trending direction, because the trajectory of the MACD line seems to be in a sort of diagonal direction that we are moving in. The RSI at 67 is the strongest among the three US indices. So that means the Nasdaq Composite Index still have more momentum in the index reading right now compared to the other two major index. Key support level, 20 days moving average at 21,208 points. Lower bound of the Bollinger Band should be what you should be looking at, with the coinciding of the 50 days moving average around the 20,600, 20,500 level, with the low on 1st of August at 21,000. Okay, so this zone over here will definitely give a lot of support to the tech-heavy Nasdaq Composite Index as well. Okay, and these are the updates that I have this week. Anything else to add before I let Gerald take over? I think there is also the Fed symposium coming up this week, right, Gerald?
Yes, I think we are now at the end of the earnings season for the first half of the year. We have seen a lot of share price movements at the back of that. So the market will likely take a breather without much corporate news in the coming week. But given the upcoming Federal Reserve meeting, where expectations are that the Fed will cut the interest rates after pausing on the cuts for quite a number of months now, I think all eyes will be on what the Fed does and whether we'll really see the interest rate cut coming through.
Yes, totally agree with you. I think you sum it up very well. We are working towards the Fed rate cuts in the next few weeks. So market is already starting to price in all these positives that's coming from the rate cut. So if there is any misses from the Jackson Hole Symposium this week that indicates that we may not be ready to cut, then market will move quite violently. So do stay a lookout for that. And we'll keep you updated in our weekly market review as well. So do stay in tune. And this is all the time that we have today. We will see you next week, next Monday, in the next weekly market review. Goodbye.
See you.
See you.